Stephanie, James, thank you both so much for being here. As a quick introduction, welcoming everyone to our next episode of First Generation Investors Executive Speaker Series titled Investing in Funds and Private Investments. Today, I'm incredibly excited to be welcoming Stephanie Lynch, co-founder of Global Endowment Management, and James Ferguson, the co-head of GEM's investment team. Stephanie, James, thank you both so much for being here and taking the time to be with us today. To kick us off, can each of you tell me a little bit about yourselves and what made you want to get into investing? And Stephanie, why don't you start us off?
Sure. Thanks, Noah, and thanks for having us. It's really wonderful to be here with you guys. So I'm a Florida native. I grew up in a little small beach town on the East Coast called Ormond Beach, Florida, near Daytona. And much like you guys, I think I probably had a similar path. My dad was the first person in our family to go to college. He decided to pursue a career in law. And so his advice to me and certainly what he asked me to do each summer and after school was to come and work for him in his law practice. And so I just naturally assumed that I would follow his path and go into law after undergrad. But he had great advice for me. He said, I'm a good lawyer, but I'm not a great businessman. And so I think it would be really smart for you to study business so you could have that skill as well when you eventually went to law school. What he didn't count on was that I would go to Florida State and I would be in the business school and be introduced to the world of investing and finance. And what I realized in those classes was that I was a little bit ADD. I actually really was motivated by changing facts and information, and the fact that every day when you woke up, the market gave you a new set of challenges and ways in which you had to make different decisions. And unfortunately, I don't think, with no offense to lawyers, that's necessarily the case in law. And so I got the investing bug, and the rest of it's history, as they say.
Yeah, absolutely. And I can definitely attest to the investing bug. My parents also told me when I was younger to start off in finance in the business world, and took my first finance class when I was a freshman in college. And that bug hit me just as hard as I'm sure it did for you. So I completely understand. And now, James, what about you?
Sure. So I have the same bug. Took me a little longer to get there. I grew up in North Carolina in the mountains in Asheville. Went to school at Duke. I was an econ major for undergrad. Long story short, I ended up working for a private real estate developer. It was a great opportunity. Started in 2006, ultimately left there in 2012. And so I had I guess with hindsight, the benefit of seeing both the best and the worst commercial real estate market at the time in really the history of the U.S. But what I found when I was there was that I was really spending nights and weekends reading annual reports, started following manager filings. I got exposed a little bit growing up through my dad, just as he was a personal investor. I started going to the Berkshire Hathaway meetings. What I found is that I was probably spending 20 hours a week, like I said, nights and weekends doing that, and realized that I should stop moonlighting and do it full time. So I had the very distinct pleasure of meeting one of my former colleagues just over a decade ago, and I joined GEM a decade ago this year.
Great. Well, thank you again so much for being here, guys. And moving on to our next question. So students in FGI have learned about a variety of different types of investors, including individual investors and professional wealth managers. And from what I understand, GEM invests a little bit differently than either of them. So for those who don't know, James, can you tell us a little bit about what an endowment is and what exactly GEM does?
Sure. It's so interesting. You pick up a paper, grab a Wall Street Journal, and you read about finance, and maybe you watch movies like The Big Short. But there's this little niche of the investment world called endowment investing. And it's really fascinating because a lot of these pools of capital are from some of the biggest institutions in the world. I think some of the leading universities in the U.S. And it's pretty cool. So what an endowment means is it's a collection of assets that's been given or accumulated over time. And the primary purpose is to support both the generations that are at that institution today, as well as the future generations really into perpetuity. It sounds like a relatively straightforward idea, and it is, but it's actually quite difficult to pull off in practice. And so if you think about throughout time, there are all sorts of different things that are occurring during history, obviously an incredibly historic moment that's occurring right now, and tragic in many ways. And so to invest in a way that allows you to thrive and grow the overall assets while supporting spending along any type of environment that you face, that's the primary purpose of an endowment. And so these institutions that are around the world have typically relatively small investment teams. They're focused on investing across a very broad opportunity set on the public as well as the private side. And they're looking for investments around the world.
That's really great. So it's funny you mentioned that because I actually currently work with my university, Drexel University's endowment fund. So I know from what I understand that certain endowments have these student managed funds. They cut a piece of the endowment and let students manage it. So I actually work with them at Drexel now, and it's a really cool experience, kind of seeing how the endowment works and the inner workings of that. So it's great to kind of make that connection there with GEM. So Stephanie, this question is more geared towards you. But from what I've seen, you've had a really remarkable career working in the investing and finance world, eventually leading you to co-founding GEM. So at FGI, around half of the students in the program are girls, many of which were really interested in learning about finance and potential careers in investing. So in a sector that's traditionally dominated by men, how did you go about navigating the world of finance when you were entering the workforce, and how did that lead you to co-founding GEM? And can you also share any advice you would give to young women looking to pursue their own careers in the finance or investing industry?
Sure. Okay, you love a multi-part question, Noah. So let me make sure that I get all the way through all three of those things. As far as getting into investing as a young woman, there's a lot more awareness around gender today, and I think that's a wonderful thing. And there's been, so much real time spent on educating people and really understanding what some of those dynamics are. When I entered this industry, to be perfectly candid, there really wasn't that much of a difference. I didn't see myself as any different than James, frankly. And the things that sort of led me to pursue a career and to be successful in it were things that you would do in any other environment. You work hard. You're the first person to raise your hand. You don't see yourself as needing an advantage or being at a disadvantage to your coworkers. You're reliable. You're inquisitive. You're curious. You ask questions. Just all the things that you would do that would lead to success in, frankly, any industry. And I was really fortunate to have some wonderful mentors. So that's the third part of your question, which I think is really important. I was fortunate enough in my first job to work for a woman who had sat for an exam that's very important in sort of defining in our field. It's called the Chartered Financial Analyst designation, or a CFA. Her advice to me was to study and pursue that designation while I was still single and had a lot of time on my hands, and I was just leaving undergraduate, so I was sort of in study mode. And that was wonderful advice. She was a big supporter of mine, and she wanted me to succeed. And so I really benefited from her mentorship. So that's something else that I would recommend frankly, all students to do, but certainly women. Find someone that you admire, someone that has some good experience that they can impart to you, and listen to them and take their advice and lean on them, so that you have someone that can sort of pave the way for you. Because I think that's something super important in our industry. It rather disappoints me that we haven't made better strides to attract more women to the investment business as a whole. We tend to be more accountants, or we tend to be in more operational roles, as opposed to making investment decisions and being responsible for the endowment's outcomes. And so I would encourage you not to be intimidated by that, but to, again, pursue it, work hard at it, and find some people that you can emulate that will give you good advice and be your champion.
Yeah, absolutely. I mean, I couldn't agree more on that piece with the mentors. I've always thought about mentorship as, looking to someone, in your community, or someone you look up to, and someone who's really living the life that you want to live, or kind of emulating some of the qualities that you want to one day have for yourself, and figuring out, what they did to get where they are, and really taking their advice along the way. And I think you really made some really good points there. So thank you, Stephanie. So switching gears to some more technically focused questions. James, students learn all about ETFs and mutual funds and different types of investments. And we know that GEM invests in some private funds, which we'll dig into in a second. But what would you describe as the main differences or pros and cons between public investments like stocks or ETFs and some of the private investments?
Yeah, it's a good question. It's sort of interesting if you think about private funds as a whole. They're relatively opaque to the outside world. When I was first exposed to them, I really didn't know. I think the term hedge fund, there's obviously a bit of cloak and dagger or secrecy around it. But what it really is it's a private partnership. So this can be for either private investments or for public investments. It's just a simple entity. But what that entity allows to do is there's a specific form of registration with the SEC, and that allows an investor to have the broadest mandate that they can. So when you enter into a private fund, there's typically a contract. It's called limited partnership agreement. But that really governs the relationship between you as the investor and the manager. And there are lots of different ways that you can allow the manager to do lots of different things, or we can really narrow that focus. And so we find, and many of the endowments share this point of view, that it's a very effective and more effective tool for accessing the best investors in the world than a traditional mutual fund, for example.
Great. Well, thank you for sharing that. I appreciate it. So Stephanie, James just shared with us some of the pros and cons and differences between investing in private investments. But can you expand a little bit more on what exactly a private fund is? So more specifically, how would you explain to your high school self what a private fund is and how GEM interacts with funds?
I want to hear this.
I know. I can't wait to hear this too. Well, I would come up with like a super simple explanation, Noah, and we'll see how this works, and James will correct me. A fund, if you will, is simply, if I was trying to put it in terms of how a college student would think about it, what if you all sat around the table and put $100 each into a pot, right? So you then, and there were 10 of you, so you had $1,000, and you were going to take that money and you were going to agree amongst each other how you were going to spend it, and why it was better for you all to have combined your capital than it was for you to keep it individually. So if you took the $1,000 and you went out and you bought a bunch of different kinds of bikes, let's say you bought an electric bike if you could afford one or you could buy one for $100. But electric bike, a motorcycle, a moto bike, and a street bike, right, et cetera. You see the analogy. If you did that and you each kept your 1/10 ownership, but you could use the different bikes for different purposes and different reasons, then the sum of the parts is a lot more valuable to you than just your individual interest, right? So that's a fund. That's sort of the conceptual idea behind it. Investors pool their capital, their money, and then they go out and buy different things within that fund structure so that they have what's called diversification. They have different uses for the money in different kinds of environments that allow them to invest in things that perform differently. That's a pretty straightforward definition of a fund.
Yeah, that's really helpful to understand. And how would you say that GEM interacts with those funds, kind of in the context of your business?
So in that case, we would be the person sitting in the room telling those 10 students what the best bike to buy was, and how much money we would put in each of those different types of assets. And then we would be responsible for coming back to you guys as a group and explaining how we did. Did our decisions make money? Did they meet your objectives? Where did we take more risk in investing that money than otherwise? And were we rewarded for it? So our role is really as the person or the entity responsible for the decision making and then accountable for the outcome.
Great. Well, that's really helpful. So I think that was a great explanation, Stephanie. So thank you for that. So now, having gone through what funds are, why you would invest in one, and how all of those work, James, what would you say are some of the qualities or factors you look for when investing in a fund, like the strategy or the investors themselves, for example? And how do you choose which funds to invest in based on what your clients are looking for?
That is the million-dollar question. So there are lots of different strategies out there. Our primary focus on both the public and the private side is finding managers that are investing fundamental bottom up. Obviously, those are two sort of jargony terms, but it's the basic idea that you're looking at what is the value of what you're purchasing and what is the price that you're paying. And so for publics in particular, about half of our portfolio is broadly invested in the public markets. There can be a wide disconnect, some of which is happening right now, between the price and what something is worth. And so we're looking for managers that can really cut through the noise, maintain a long-term focus, and then really have the fortitude to survive those environments. Obviously, that's one half of the equation. The other half of the equation is you need to be right. And so ultimately, at its core, investing is about predicting the future, which is an inherently difficult game. I like to describe it as, if you went and met with a doctor, you had, let's say, an orthopedic issue, maybe you went skiing and blew out your knee, and they said, well, we're successful 50% of the time. That would be a shockingly low outcome. In investing, the best investors in the world are right roughly 2/3 of the time, which is still, to state the obvious, a third of the time you're wrong. That's still a relatively high failure rate. And so we're looking for managers that they have the constitution or the temperament where they can survive the ups and downs, and they're balancing really the confidence or borderline arrogance to suggest that they're right when on the public side the market's suggesting they're wrong. But they also have the humility to know that they're playing a really difficult game and at times they are wrong. On the private, it's relatively similar, except for you just don't have the friendly quote-unquote Mr. Market who's reminding you of his or her point of view each day.
Yeah, sure. I heard that analogy before. The being right 2/3 of the time is being really successful. And I always thought that was really interesting. Especially the analogy you gave. If a doctor is only right 50% of the time, that's really I guess a bit of a red flag. But in the investing world, being right 60, 65, 2/3% of the time, it's a really successful success rate. So I always thought that was a really interesting dynamic and an expression there. So thanks for sharing. All right, so Stephanie, all the students in FGI leave the program with $100 to invest and the knowledge to invest for the long term. So based off of GEM's investing model, how do you think that an individual investor can learn from GEM's investing model to apply to their own investments, and can anyone invest in private funds?
That's such a great question. So let me answer the second part of it first, because it's a little bit steeped in, unfortunately, investment regulation. So because GEM operates in a private fund capacity, there are a couple of tests that our investors have to meet, and that works really well for endowments, but not really great for individuals. The SEC basically has decided, the Securities Exchange Commission, who is sort of the watchdog for the investment industry, they decided that they needed to put limits or thresholds, if you will, on how much money you needed to have amassed in order to invest in what are considered private funds rather than just buying an ETF or a mutual fund. And there's a reason for that. If you invest in a mutual fund and you're the manager of that fund, there's lots and lots of information that you have to disclose to the buyer, to the investor, to make sure that they have every piece of information they need to make a really educated and informed decision. And so there's certain rules and regulations associated with that. And pretty much anybody can invest in a mutual fund. In a private fund, they make the assumption that in order for James and I have more flexibility on where we invest and the types of managers we invest with, and the types of assets they purchase, they want to assume you have a certain level of sophistication, and they tie that to the amount of money you have. So for an individual, it needs to be $1 million. So you actually have amassed $1 million in the form of securities, not real estate, to meet one test. And there's actually another test to invest in our funds, and you have to have actually $5 million in assets outside of what you own in your home, for example, in order to just give James and me your money and have our team invest it. So the way that you would try to glean something from how GEM's investing the portfolio would be to read our quarterly letters, which are available to people, and look at how the asset mix, how much we put in stocks, public stocks or private equity funds, whether or not we're putting more money into bonds or more into commodities, for example. That would give you some sense about what our views on the market opportunity set is, whether we're worried about inflation, for example, or whether we think interest rates are going to go up. That would be one way to get an idea of sort of how we think about risk. And then if you read the letter, we actually talk about managers that we like and why we like them and what we think their edge is, which is something that James was talking about, how to identify managers that we think are going to really outperform in a specific industry or sector. So that would give you another really good idea about, I guess, what James and the team likes at a point in time, or where they think that they're going to win more, if you will, than somewhere else.
Sure, yeah, it's really helpful to know. And I was thinking, being able to understand, what managers you like and some of the qualities you look for in some of those managers, I think is a really interesting way of analyzing that, especially when you're able to look at mutual funds and invest in those and be able to understand, what are some of the qualities that good managers have from, not as good managers, and being able to use that, in your strategy and investing in, a mutual fund, for example. So thank you for that. James, as mentioned earlier on the call, many FGI students leave the program eager to pursue their own careers in finance or investing. So can you tell us a little bit about what a typical day in the life would look like for an entry-level analyst at GEM?
I'm not biased at all, but I think it's one of the coolest jobs that you can get right out of college. So if you think about what they're doing, our platform, we have some of the most privileged seats in the world. And what that means is that as a 22-year-old right out of school, you have a chance to meet with some of the best and brightest managers from all around the world. Obviously, the last 2 years have been quite different, where most of the work that we've done has been conducted, in some cases sitting at home in our pajamas, but in other cases sitting in the office. But prior to that, and then going forward as well, we travel all over the world looking for the best and the brightest, interviewing hundreds and hundreds of managers, and then just selecting a small handful of those. And so for our program and for many of the leading endowments, the early analysts at 22, 23 years old, they're right along there with you. And so they're in the room asking the questions, going and following the companies, looking at what the managers said, pushing them on their thesis to really drill down to why they have the point of view that they do. And so most of the work at its core is really around sourcing, the diligence work that I just described, and then the monitoring of the investments. If you think about a public portfolio, which is roughly half, like I said earlier, of an overall endowment portfolio, we have about 30 managers. We'll often hire 2 to 4 managers per year, which implies and roughly matches history, where we're invested for roughly a decade. And so what that means is that there's a lot of time and really deep relationships that's developed with those managers. You really get a sense of what makes them tick, why they have the point of view that they do. And then the early analyst is right there along with us throughout that journey.
Yeah, no, I couldn't agree more on that piece. And I can personally speak to, having that experience early on in your career, I think really does propel you so much farther, later on, getting into, a job at the right time and starting early on, right out of college or, a couple of years after, and really learning those investing skills and being able to have that interaction early on. So I completely agree. So James, Stephanie, this has been absolutely fantastic, and thank you so much for being here and sharing your knowledge and expertise with the FGI community. To tie the knot on our discussion today, with our last question, what advice would each of you have for a first-generation investor? And Stephanie, why don't we start with you?
Sure, that's such a great question, Noah, and thanks so much for even giving us the opportunity to speak with you and all the great FGI members that are out there. I mean, I think from my perspective, what you're doing right now is the first piece of advice. I mean, get involved with opportunities like this so you can get exposed to different aspects of investing, and really educate yourself. Get some understanding maybe of a part of it that you're passionate about. I think that's something that James and I talk about a lot when you're trying to differentiate yourself in a really competitive field and there's so many bright people. Being able to really speak authentically about why you have this investment bug, like we talked about before, or what about it makes you really excited and want to pursue it is really important. And it really comes through when you're talking to people about wanting opportunities. The second thing I would do definitely at each of your at your institutions is, again, seek out mentors like we talked about and ask alums and other people that are engaged in this business, ask them for favors, ask them for internships, ask them for advice. Everybody remembers what it was like to be in your shoes and want to have someone take a chance on them. And I would not be shy about asking for help.
Absolutely. And on that piece, I always heard one thing that actually my mother told me when I was a kid, that 20 seconds of courage can take you a really long way. And I think applying that here, being able to ask for some advice, from an alum or from someone that in your community, being able to just reach out, ask for help, ask to learn more. Even just 20 seconds to ask the questions can really, start a lifetime of change and really propel you in a different trajectory. So I completely agree. And James, what about you?
I completely agree with what Steph said. Maybe the only thing I would add is one of the cool aspects about investing is there's so much that's public out there in the world now. And so if you really apply yourself, you can really go as far as you want from that standpoint. I would very much share in terms of getting prepared for the mentorships or the internships. You can go and pull things like the Berkshire Hathaway letters, which coincidentally the latest one just came out last weekend, and really teach yourself. There's a lot of great books that have been written. There's a lot of incredible resources that are out there. There's even a thread on Reddit called Security Analysis where a lot of the best managers' letters are published once a quarter. And so the opportunity is really sitting out there in front of you, and I would just encourage you to go and take advantage of it.
Yeah, absolutely. Especially on that just seeking out knowledge piece. There are so many books out there that you can just read and just absorb knowledge, even easy ones that really outline things in a really simple way. And then as you learn more, really just digesting the more advanced information. And I think that really does position you well to succeed in the long term. So 100%. But with that said, I think we're just about wrapped up here. James, Stephanie, again, thank you so much for being here. This has been an absolute pleasure for me and the entire FGI community to hear what you have to share and hear your insights and thoughts. So thank you again for being here. And I hope this is just the beginning of a very, very long-term relationship between FGI and GEM. So thank you again.
Thank you.
Thanks for your time. Good luck.